Hello and welcome. Great to see you all on Zoom tonight. I like doing these seminars that are Zoom only because it reaches more people, and I think it's really valuable for a lot of you that can't come to my office for the seminars that we have. So welcome tonight. Tonight I am going to be talking about annuities and really what they are, why they would benefit you, why they would maybe not benefit you, or if you have an old annuity that hasn't performed well for you, maybe this is a seminar for you as well. So annuities, I always say, are not good or bad. It just depends on what you're looking for. Are you looking for income guaranteed for your life? Are you looking for downside protection? Because they can offer all of these different kinds of things. So I'm excited about tonight. Thanks for joining us. And so let me jump into some of my slides here. Okay, so building foundations for financial wealth. This is my series for talking about building wealth, building the foundations that get you to wealth. I think that's really important. I am Kelly Slott, if I didn't mention that already, and the president and CEO of California Wealth Advisors. Me and my team love what we do. We love helping people. We love taking portfolios and making them into what clients are actually looking for. So we love that. Our main office is in Santa Barbara, but I do meet with a lot of folks in the Anaheim Regis office that I have down there. So a deep dive into annuities tonight. Again, not good or bad. It just depends on what are you looking for. And I am an author, of course. California Wealth Advisors is my firm, and we do have a book on our website, The Great Retirement Mystery, How to Avoid the 6 Biggest Blunders. And this book is really for anyone. Retirement is in the title, but it's really for anyone. The 6 biggest blunders are for anyone, and you can get it on Amazon, Barnes & Noble. You can go to my website, California Wealth Advisors, as well. But the big blunders, I think I just see them all the time. So I wanted to put those in my book as well. And what's one of the blunders? Who are you listening to? Are you actually listening to someone that manages folks' portfolios, that's professional wealth management like we are here at California Wealth Advisors? Or is it your neighbor or your best friend? And do they really know your entire portfolio? So that's one of the blunders in there. There's 5 more in there. You got to get my book to find those. So I do have a radio show. Many of you have heard me on the radio so far. It plays on Saturday mornings. And anybody that's listening tonight that hasn't heard my radio show, you can go to my website, California Wealth Advisors. If you go into the radio tab, I have 3 years of radio shows on there. And they have a little title in there that's talking about each individual show, about what I'm talking about mostly. But I cover a lot of information each show that I do. It's very educational. It's not product specific at all. It's more to educate people on what's available to them, things to look out for. If you want to avoid taxes, I talk a lot about that. So by all means, go on my website to listen to any previous radio shows. So the key components to investing, in my view, is to actually have a specific plan that's created for you. And again, that's what we do here at California Wealth Advisors. We create specific plans for you. Do you have the correct diversification? Do you have all your money in the stock market? Or do you have some diversification in alternatives or safe money as well? And most clients that come to me, they can bring me $1 million, $4 million worth of 401k funds or trust accounts or something like that. And it's all in the stock market. And of course, you have a lot of risk when you're all in the stock market. And I created this mass proprietary process that you see on the screen here years ago to help people understand how investments work. Investments don't have to be all in the stock market. Now, when you go to the big wirehouses, that's all they do. So that's all they will tell you. But there's a whole wider array of things for people to do out there. So M is the market, A is alternatives, S is safe money. So M is the market. Yes, it's red for a reason, right? Markets are going to go up and down. You've got to be able to weather that. A lot of times people get closer to retirement and they don't want to be 100% in the stock market anymore. They want to have something that's safer, which is what I'm going to talk about here tonight with the annuities. And that's the dark blue section. That's the S part, the safe money. So annuities, life insurance, long-term care, CDs, even cash, that's considered safe money, right? So I'm going to talk about that in more detail in a minute. The alternative space, the A space is great as well. Real estate programs, private placements, oil and gas for write-off programs, or even tax advantage income streams that those can create are wonderful for folks. I do 1031 exchanges. I do opportunity zones. I do deferred sales trusts as well. So all of these different kinds of things are really beneficial for clients as an overall financial plan. And that's what you'll find as a recurring theme with me. I look at your entire financial house. These right here are your investment dollars that I'm showing on the screen here, but we have way more than that we can do for you. So that's what you get at a full service advisory firm. Okay. The private client process is very important to many of my clients because they want to have their investment dollars looked at and managed for them, but they have a wide array of things that they really do need to consider in their whole financial house. So I'm going to stop my screen here and share because I want to write this out for you. I think it's better when I can write it out. So I position myself in my private client process for you as your financial director. So your financial director, again, I am managing that at California Wealth Advisors, and I'm overseeing all the accounts that come in. So this is your entire financial house here. So there's more to your financial house than just your investment dollars. And that's incredibly important. That's what I just talked about there. But we have way more to your portfolio than just that. So right here we have your risk. And what is your risk managed side? Risk management is what I'm writing here. So risk management, what kind of risk do you have in your portfolio? Are you paying too much in taxes? And a lot of us are, that's for sure. We don't like paying taxes, or I don't like paying taxes. Do you have long-term care, and is that important to you? Social Security, we're looking at here too. Social Security, if I can write. We're looking at your insurance policies too. A lot of times we're looking at umbrella policies for our clients, particularly that have rental properties, because if your umbrella policy does not cover you for enough and you get sued, you don't want to have that coming out of your pocket. So we're going to look at your umbrella policies. We're going to look at your auto, your homeowners, your property and casualty insurances as well. So the risk side here, again, your taxes, your titling of your assets is important too. How are your assets titled? If you get sued, can your, let's take an example. You have a rental property, somebody hurts themselves, and let's say the property is titled in the name of your trust or even in your individual name, and you get sued, they can sue you for all of your assets, not just that particular rental property. So that goes to the titling. So again, all these things can be a risk in your entire financial house. It's important to look at these. Then we look at estate planning. What kind of estate planning documents do you have? Do you have the correct documents? Have you updated your estate planning documents recently? And if you haven't, then you probably should look at them because tax laws change. Where you want your assets to go might change as well. So updating these is very important. I do have estate planning attorneys I work with and really help people get their correct documents, their powers of attorney, their medical powers of attorney. These are very important as well. Again, making sure your titling of your assets is correct. Again, if you have a rental property, I just talked to a client yesterday, actually. He had a rental property, but it was in the name of his trust. And so he thought he was protected. I said, no, you're not protected against lawsuits for that. You are protected if you died and your assets, they need to know where your assets go. And that's great for that, but it doesn't protect you against lawsuits. So making sure your assets are titled, and then sometimes that's setting up LLCs for folks as well. So we look at all of these kind of situations that might be in your particular portfolio that you don't even know you have at risk, or you don't even know that you need. So these are all the things we look at there. Then we have over here the vault. And I think this is a fabulous place for most folks because it takes all of your assets here, your investment dollars, your risk side, your umbrella policies, your declaration pages for your insurances, your estate planning documents, and it puts them all in one place. So this is a fabulous place to make sure your heirs know where to go. If you ever are hurt, you're in the hospital, or you pass away, your heirs know to come to us because we have all the documents in one place. Again, if you get in a car crash, or you have any kind of issues with needing something, we have it for you. Many of my clients travel quite a lot. and they give us their passports. I had a client last year, before she was a client of mine, she was in Spain, and unfortunately she got pickpocketed. So she lost her passport. It took her 2 weeks to get out of Spain because of all the rigmarole she had to go through, poor thing. Now she's a client and I have her passport in the vault. So when she travels again, if she ever gets pickpocketed and loses it, she knows to call us and we can send it right to her and she'll have a copy of it. So the vault tends to be great. We do a once a year balance sheet for you as well. So all your assets, again, going in one place. Assets change all year long, right? All your working career, before you retire, even after you retire, your assets are going to change in each one of these sections. You're going to sell a house, you're going to buy a house, you're going to add more money to your 401k, you're going to transfer your 401k, all sorts of different things happen in your life. So this is a constantly moving thing here. So that's what me and my staff take care of for you as a full financial house management of your assets there. So it doesn't matter to me if you're worth 5 million here or 100 million. If you're not taking care of all of these different things, it doesn't matter what kind of return you get on your dollars there if you're not taking care of all of this. So there's 3 ways we get paid here. And one of them is we charge a fee to manage all of this for you. And I can talk to you about that if that's of interest to you. Then the investment dollars, of course, whatever we're managing here, we charge usually around 1% for that. And then the third way we get paid is if you know that someone is here could really benefit from what we have here, kindly give us a nice referral, because that's how we grow our business and we reach more people and we help more people, because that's what we love to do. So this is our private client process. This is not for everyone, but I wanted to explain it to you so you could see all the things that we do for folks here at California Wealth Advisors. Okay, let me go back to my chart here. So I want to share, I want to go, what am I doing here? Share screen, there we go. Okay, there we go. Okay, so that's that's my private client process. Again, not for everyone, but I wanted to explain it to you because we are doing way more than any other advisory firm that I know of helps people with. So there's a picture of it there for you. Okay, let's talk about what an annuity is. So annuities are so misunderstood out there. So I really wanted to take tonight to really explain what they are, how they can be a benefit for you, the good, the bad, the ugly of annuities. And if you have an annuity and you don't know which kind you have, then by all means send us your statement and we'll go over that with you to see what kind you have. But basically, there are 3 kinds of annuities. There's a fixed indexed, and a variable. So what is a fixed annuity? A fixed annuity means you have a steady rate, and let's say it's 5%, and you put in $100,000 and it matures in 5 years. You're going to get 5% on that. You're going to get your $100,000 back. It's backed and insured by an insurance company. So it's considered one of the safe investments I can do for you, but that's fixed. That means nothing's going to change. Your principal stays the same. Your interest rate stays the same. It's boring, if you will, but a lot of people like boring, especially when they get into their retirement years. The fixed index means your principal is guaranteed by the insurance company and that you have a steady increasing return. Or you can look at it this way: the market goes down, you don't participate in that. I'm going to show you a chart in a minute here. Or if the market goes up, you will participate in that. Now, sometimes I see with old fixed index policies, not the ones that I typically do, but they have caps on them, which means you can only make up to a certain percentage. And I've seen 3% or 5%, for instance. So if the market goes up 10%, you only get 3% or 5%. They have those caps sometimes in those fixed index annuities. Again, if you have an old annuity that has that, call us. Let's see how we can fix that for you, because I like unlimited strategies, unlimited upside to investments that people have. So I like those fixed index annuities a lot. The variable annuities, again, long-term up and down, variable with the market. Variable means something. It's going to go up and down with the market. They typically buy mutual funds for you in those kinds of accounts. So here's a chart on what they actually look like. I think this is really important for people to understand too. Fixed, that's the blue line. It's going to be 5%, for instance, as an example. $100,000 you put in there, you're going to get that steady rate, and that's it, nothing more than that. That's a fixed indexed annuity. I'm sorry, that's a fixed annuity. Then you've got the fixed index annuity, that's the green. So the market will either go up, be flat, go up, be flat, go up, be flat. It will never go down, right? That's the insurance you get from the insurance company that backs it for you. Again, the annuities, just to give you a little more history, annuities have been around a long time, 200-300 years sometimes with these companies. They're not new. So we need, when we do these, we always go with really high rated companies that are very, very good, been around a very long time, to make sure we get you the best return we can. Okay, variable. A variable annuity is the red line as an example. It's gonna go up and down. You can see it's gonna go up and down with markets. So when I have that in portfolios, it's usually for my younger folks because they have time to weather ups and downs. When you get closer to retirement, I would really rather see you in the blue or the green line because I don't want to lose any money for you. I want you to make sure that all those years of working and saving that you did stays with you. So the blue line and the green line, closer to retirement, I like that. Or if you say, hey, this asset is for my children, I don't really care about taking money out. I'm not looking for the lifetime income guarantees. I want it just to massively grow. Then we can look at the red line for you as well and the green line, and maybe we do a combination of both. But of course, there's more risk with the red line. Okay, the green line and the red line, I do like these two annuity types because they do have income that can be guaranteed for your life and or your spouse's life. I can also set up income that will be beneficial for inflation. So they'll have inflation hedges in them. So they'll go up each year that you own them, especially if you're starting to take that income out. Again, many people love that income for life guarantee. There's not many products I have that will do that. The stock market certainly will not do that. Even real estate will not do that. So where do we go for income guaranteed for life? Well, Social Security, and some people worry about Social Security being there with the government doing its spending that it likes to do, unfortunately. But I do actually have, let me mention this, for the green line here, I have annuities that actually will kick in if Social Security goes down by 3%. Also, in the green line here, the fixed index annuities, I have programs that will really help with, again, the Social Security, but also long-term care. If you have a long-term care situation, they can have benefits as well. So there's a lot of benefits to these different kinds of annuities. Again, what is it that you're looking for? That's my question to all of you out there. What is it you're looking for? How can we satisfy what you're looking for? We also do life insurance. That's not on my chart here, but life insurance will allow you to have long-term care, certainly death benefits, and you can gain tax-free income from life insurance as well. So a lot of different benefits for different products, but today I'm focused on the annuity side of things for you. Okay, again, are annuities good or bad? Neither. It depends on what you're looking for. What are you looking for? Are you looking for that income guarantee for life? Are you looking for that downside protection? It just depends on you. That's why we tailor make things for you. Okay, well, again, what are the advantages? So the advantages of annuities, again, I can do downside protection for you, and I can do income guarantee for life. I can throw in long-term care. I can throw in benefits if Social Security goes down. I didn't used to have those benefits to them. So there's a lot of advantages to these annuities that I didn't even have 2 to 5 years ago. So again, if you have an old annuity and you don't have some of these benefits, call us, get yourself on our calendar, send me a copy of the statement, and let's see if we can improve that for you. Many times I can. Again, creating income for life. How valuable is that? How comforting is that? I have so many people come to me and they're so happy that I can create income for life for them. They really are. They're the sense of relaxation, maybe I should say, the sense of being comforted is huge here because there's not a lot that will give you income for life. You can, of course, have maximum growth on your annuities. Again, it just depends on the type of annuity you pick. If you pick an annuity that's going to give you income for life, it's not going to have maximum growth. If you pick an annuity with maximum growth, it's not going to provide income for life. So it just depends on what you're looking for. It really does. And again, this is what we tailor make for you. We really do. There are tax advantages to your heirs. If you do an annuity outside of a retirement account, let's say you have a trust account, let's say you have $1 million or $2 million in your trust account, and you like the downside protection that the annuity can provide, you can take that $1 million, put it into annuity, and God forbid, let's say you died the next day. That $1 million is going to go to your heirs tax advantage. That's a very nice way to give assets to your heirs in a tax advantage way. So that can be very nice benefit for your heirs and your loved ones. Okay, why are there stories out there about annuities are not good or they are expensive? Again, it depends on the annuity. It depends on your goals and your time frame. Let me tell you a story about annuities and the different stories I hear out there. So I had a client and she had an annuity and she had it for about 10 years or so. And she said, and she didn't buy it from me, she had it for 10 years and then she came to see me and she said, yeah, this annuity I have 800,000 in there and they're guaranteeing me 5% a year and I'm just not sure I want to change it. And this was 5 or 6 years ago when interest rates were not that high. So I said, okay, well, 5% a year. Well, what is your fee on that annuity? And she said, oh, I don't know, but they guarantee me 5% a year. And I said, well, have you seen growth with it? And she said, no, it's only gone up about 1% a year and I've owned it for about 10 years. And I don't really understand that. I said, okay, well, let's take a deeper dive into this. So she brought me her statement and I looked at it and I said, yes, she was guaranteed 5% a year. Absolutely. But the advisor was charging her 4% a year on this annuity. So she was really only making 1% a year. So the advisor was really, really happy with this account, as you can imagine. Well, that is not right in my book. It should never work that way. So subsequently she transferred and we took care of her and we got rid of those high fees, that's for sure. And we put her into a fixed index annuity. So because she had a variable annuity, so it was going up and down in value, even though she was guaranteed 5%. So you have to know what you have, right? And a lot of people, they just don't know what they have. So annuities can be good, they can be bad in her situation because the fees were really high. So again, if you don't know what you have and you don't know what you pay, then you need to know. And I will help look for that for you. If you bring me a statement, I'll show you what the fees might be. So again, a lot of this depends on your goals and your time frame. Most of the annuities I do charge somewhere between 1% and I haven't seen them up as high as 2%, maybe 1.75% for the benefits you get from them. Again, things aren't free, right? So if you're getting guaranteed income for life, maybe your fee would be 1.5%. And if you were looking for maximum growth, maybe your fee would be 1% or even lower than that. So again, it depends on what your goals are, it depends on what you're looking for. I'm not expecting you to research that as far as which annuity would be better for you. That's my job. So again, when you come to us, California Wealth Advisors, and we do different kinds of annuities for you, we're the ones taking the data that you're telling us. Let's say you want to have income for life. Let's say you want it for you and your spouse, and you want to guarantee for your life. Well, we're going to shop it around based on how much you're putting in, what kind of income you're looking for, and your time frame as far as which annuity would be better. And again, we shop it around to 20, 30 companies for you. We're not tied to any one company. So again, as an independent financial firm, I am not tied to anyone particularly, and I can find you the best product that's out there. Okay, so what can you do with an annuity that you have that maybe hasn't performed very well, or maybe it has high fees like the client I mentioned earlier? So if you have an annuity that hasn't performed very well, let's see if we can improve it for you. Let's look at the fees. Let's look at their performance. If it's in a variable fund and it hasn't performed very well, maybe we can change it around for you. A lot of times we can do this. This is called the 1035 exchange. There's no taxes for you to change it from an old annuity into a new annuity. So when we do that, a lot of times it definitely benefits you. So again, it's what you're looking for. You're looking for the income. You want to lower the fees that you may pay for it. Maybe you want to increase the benefits you get out of your different kind of annuity that you have. Okay, some of the benefits of particularly fixed indexed annuities. You can, and this is true for variable annuities as well, in some ways. So it's an insurance product backed by an insurance company, particularly the fixed indexed annuities. You can transfer your savings that maybe you're not getting a lot of return on. Banks don't pay that much, and maybe you can move that into an annuity that will give you higher income, for instance, than maybe the bank would pay with downside protection backed by insurance companies. Again, you can have potential growth with these. You can have a lot of growth with these, and I can sort of show that through the illustrations, but there's a lot of growth that can be had here as well. Protection of principal. Again, the downside protection is wonderful for folks with these different kinds of annuities, again, backed by the insurance companies. Your income can be guaranteed. I like that. It brings comfort to my folks when they say, boy, I know what my income's going to be the rest of my life. You can, again, have inflation hedges onto that income if you'd like. Tax deferred growth. Again, you put money in there, and if you don't take any money out, then it can be tax deferred for you. Maybe you do want to leave it for your heirs. It's a great way to pass on dollars to your heirs. So the tax deferred growth is great too, because you're not paying any taxes on the growth that's going on right now if you're not taking any money out. It can be a bond-like replacement. I started this business many years ago. I specialized in municipal bonds, California municipal bonds of the day. And I found that the indexes, the fixed index annuities, I think are better than bonds because they do give you the downside protection. Bonds, of course, are going to go up and down with the markets. As interest rates rise, bond values go down. So as interest rates, we're seeing them rise in the last few years, particularly, the bond values that I've seen people's portfolios in have gone down because it's an inverse relationship. So we can, a lot of times, if you have a large bond portfolio, we can replace that with an annuity and give you that downside protection. You have a lot of options with the annuities as well, a lot of different choices about delaying income, doing maximum growth, doing inflation hedges in there. There's a lot of different choices you have on there. And I think predictable income helps make retirees happier. I really do. So that's one reason why I encourage people to at least look at annuities in their portfolios. Of course, I am a fiduciary. I am always going to put your needs before anyone else's. I always have, I always will. We pride ourselves here at California Wealth Advisors in being a fiduciary for you. We are A+ rated at the Better Business Bureau as well, so we're very proud of that too. So we do have complimentary services that we do. We can do our initial consultation would be a portfolio review for you. That would be complimentary to see how we can help you, if we can help you, if we're going to be a good fit for each other. We can do Roth conversions, debt management. We've helped people with that over the years as well. Cash flow is huge. A lot of people want to have those cash flow projections in their entire portfolio as well, especially when they get closer to retirement or if they're in retirement. Emergency funds. I think it's important to have 6 months of your budget in your savings account, and we have high yielding savings accounts these days we can put those funds into. I like 6 months of your budget in there. That's why I always ask, what's your budget? Everybody listening here that's met with me always knows I ask, what is your budget? Retirement planning, of course, we do specialize in that. We work outside of retirement accounts as well. As you can imagine, a lot of folks have retirement accounts that they want to roll over to us. For instance, 401ks, $1 million, $2 million, $5 million of 401k funds they want us to manage. But we do want to look at your entire financial house too, right? We don't want to look at just your investment dollars. We've got to take into account what other income you have coming in, when to take Social Security. This all goes to retirement planning specialization. We do provide those 1099s and other tax documents to you as the year goes on and the year ends, and those get created. We do manage required minimum distributions for you as well. So if you have those retirement accounts with us, we have staff that come up with the dollars that you need to take out of those types of accounts every year if you're over age 73, and to make sure that happens for you. Budget planning, huge here. You've got to know what your budget is. You really do. You've got to know how much money you're spending every month. And I do have a budget sheet I created, and that's on my website, CaliforniaWealthAdvisors.com. You can print out the budget sheet for yourself, know what your budget is, because I need to know, especially when you get into retirement, what I need to manage too. I do have many seminars and client educational events. This is one of them tonight. I hope you're enjoying my education here on annuities for you. Okay, these are a lot of things we work with, certainly by no means the only things we work with, but certainly 401ks, doing rollovers, in-service transfers for folks, open a brokerage window within those 401ks is something we do often as well. Trust accounts, of course, I talked about my private client process. I'm going to work with attorneys to set up those appropriate trust accounts for you. Yes, we do 1031 exchanges as well for any rental property that you want to sell and you don't want to pay the taxes on it. Then we do have 1031 exchanges. We have probably 10 or 15 different ones to choose from at any one time. We're not negotiating anything. We already have them set and ready to go. We look through our list together and we pick which ones are going to be best for you. Tax minimization. We have a lot of write-off programs that we work with folks, tax-free income streams that can come in through those, and legacy passing certainly is very important for folks. We also are looking at opportunity zones, deferred sales trust, other ways to try and save you on taxes. I have a client that's selling his $2.5 million business now, and I'm helping him work through what he can do and how we can save him some taxes on that. Of course, I went over variable annuities, fixed annuities, 1035 exchanges. So that's when you're taking an old annuity and putting it into a new one. But we do that, and that's, of course, what I spoke about tonight. Old life insurance policies, a lot of times I can approve those as well. I have many clients that have life insurance policies, but they don't have long-term care attached to them. Well, guess what? I can change those as well. Also, it's called a 1035 exchange into a new annuity to really, into a new life insurance policy to improve that for you as well. And Social Security planning, when's the right time to take it? Why should you take it at certain ages? I'll go over that with you as well. So where are you on this spectrum of investments here? So are you totally in the stock market, which again is red for a reason, or are you totally in in cash, which has very low risk, obviously? Are you somewhere in between? And do you have a diversified portfolio? And I like to have diversified portfolios for you. I don't like all eggs in one basket. So if this is you over here on the red and you don't really want to be there, then give us a call and let's see how we can help you. Again, my master proprietary process is key on how I structure investment portfolios. Again, this is different for everyone. This is just an example up here, but this is different for everyone. Some people love real estate, for instance, in the alternative space. Some people don't, and they want to be in safe money. Some people love the stock market. Of course, we can do it all. We are a full service advisory firm. We do have a lot of upcoming events. I know this is hard to read, but if you just go to my website, californiawealthadvisors.com, you can see all my upcoming events that I have coming. We talk about real estate. We have one on the stock market, and we have a specialist coming in to talk about the stock market. This one tonight is on annuities. We have them all going all year long for you. So I think this is really important for you to see here. Oh, I meant to say, for those of you that have written in questions here, I'm not going to answer them right now. I'll get back to you later with those. I wanted to make this as short and sweet as I could tonight. So if you have questions, either I felt like I answered it during the seminar here tonight, or I will get back to you with the questions that you might have. You can always type it in the chat here. My first consultation, for those of you that have never met with me before, I like that first meeting to be in person. I want to get to know you. I want you to get to know me too. I want to make sure we're a good fit. I like that first meeting. I prefer it in person in my Anaheim office or my Santa Barbara office. I can do Zoom meetings and I can do phone calls as well. But I want to have that personal relationship with you. Again, thank you for joining us. I really appreciate you listening. I hope I taught you something new and interesting, something perhaps you didn't know about annuities. Certainly, you might have a lot more questions. By all means, send them to me. I will get back to you and answer them for you specifically. Okay? All right, great, you guys. Thanks so much for everything. I really appreciate you listening. Again, keep coming to my website. Keep listening to the seminars we have coming up. We have a lot of good ones coming up. So stay tuned to that California Wealth Advisors website that will have all of those upcoming ones on there. Okay, great, you guys. Thanks so much. Talk to you soon.